right. Okay, the meeting is recorded. Thank you for that. All right. Basically, the first thing we're looking at is we're looking for a trend. Okay. So Australian dollar, US dollar. How am I going to back test this trading system? Now, I already know it's in the downtrend. It's going to continue down. I just don't know where the profitable trades are. I don't know when we get those deep pullbacks. I can't remember what's in my head. But let's go back test. Okay. So first thing I want to do is I'm going to identify where the market is right now. And we're at this big support level. And we're not at a big support level because we've got all this area through here. We've got area there. And we're still looking for selling opportunities. It's just a matter of where are we looking for those selling opportunities. How's my fibs? Okay, yeah, we got fibs. All right, so the first thing is we have support, support, support. So just out of curiosity, everyone just type in just quickly, like, buy or sell. What would you guys be doing right now? There's no right or wrong answer. Buy or sell. What would you buy? What would you be doing? Or just not trading at all? So I'm just getting my notepad up here. Buy. Where's my pen? There it is. It's my desk. Most people. Okay, so we've got a lot of sells. We've got a lot of buys. Buy, sell, short term. Retrace it before I sell. Check the trend. Cool. All right. Well, first thing I'm doing is I'm looking for a selling opportunity. There's absolutely no way that you will get me to buy this market. Now, most people say buy because it's at the support level. That's totally fine. There's no right or wrong answer. But I'm still looking to continue with a short opportunity. Why? Because we have the 20, the 50, and the 200 exponential moving average in a downtrend. Okay, so my trading system is only sell this market. Do not buy it. And if you stuck to that rule over here, you would have done all right. And that was, that was from 2013 all the way through to, well, basically the whole of 2013 almost. Not the whole of it, but a lot of it. A lot of the 2013. Anyway, so I'm still looking for a selling opportunity. It's just a matter of where do I look for a selling opportunity. So two things I'm waiting for when I look at this and I go, all right, I'm going to backtest this, is wait for the break, retest, push down. Now, it doesn't have to retest this area. It can sort of come up and then come down here and form a base and then drop. We'll see how it goes. I actually don't remember what happens with this one. Or we're going to look for a pullback to an area of resistance to look for a selling opportunity. They're the two things we're looking for. So let's sort of go through. Is it forward or play? It's forward, isn't it? We want to go through candle by candle. Okay, and back testing is boring. So I'm just going to pen and pad it. I hate using Excel. I don't use Excel. I like to do it the old school way. I use the pen and pad. I don't have I'm just typing in win-loss, break even. I don't have Excel skills. I like to use pen and pad. All right, sweet. All right, sweet. So basically what I'm looking for now is some sort of selling opportunity. So what we're just waiting for here is we have a clear break. Okay, so now this is a little bit too early to look at selling it yet. It could still pull back and turn around and go from there, but let's see how we go. What I really want to see is a decent price holding under here. It is a bit of a head and shoulders there. I don't trade patterns as much. I don't really care for patterns. Sort of, if they're there, they're there. But I'm not, big on patterns. But that head and shoulders was more valid as that neckline broke there, more so than it was down here. So that head and shoulders was valid around that level there instead. All right, so here we're getting a bit of a push back through. So this could sort of be a bit of a, because we always know support is a whole area. It's not just one level. So let's just see what's going to go through and happen right here. So we're still looking for selling opportunities. We're just waiting for, we're going to hold. All right, so now what's happened is price is forming a bit of a base. So let's just put that there. And that's the support. what I want to see is I want to see price break out of that box to the downside. And I'm going to start looking at going short. All right, so we've got the pullback here. Okay. Pinch and cross on the stochastics. It's not quite overbought. That's okay. We can sort of still go from there. All right, now we've got to break higher. That box is no more valid. This is kind of just messing around. There's no trade opportunity yet. Here we go. Now we're starting to look for selling opportunities. Okay, so we broke past here, big bearish engulfers. We can go to the 4 hour and start looking for selling opportunity. The reason we're going to the 4 hour now is obviously we're below the 20 EMA. But in saying that, we had one last final push to the upside before the next big push down. We've cleared that support level by a mile. We can now jump down to the 4 hour and start looking for some sort of selling opportunity. Now, on a clear, fresh break and retest, you don't usually get the oversold stochastics. Not always, not all the time. Sometimes you do. And what I mean by that is this is a big area of support that just broke. If this comes and retests here, we're not always going to get the overbought when it's just freshly broke a big level, right? So we're going to go through and wait for that sort of retest. Was down off an entry? No, not so much for me. No, I'd like to sort of see a bit more of a 4 hour pullback and we'll go from there. So we're just waiting for a pullback here. Okay, so I'm kind of liking what we have here. We've got this little rejection here. Okay, let's see if we get a big bearish engulfer coming through. All right, now this is really looking good because we are overbought. Now here we go. That's our entry right there. So the reason that's our entry is we've got this little bit of a double top, right? Pinch and cross on the overbought stochastics, retesting within that area. Again, it's the area. And now we go from there. So what we're going to do is we're going to sell stops. My stops would be above that high right there. Where would my take profit be? Well, so let me just squish that up a little bit more. That's better. Yeah, I'm going to go about there. I'm going to go at that support level right there for my take profit. And let's see how it goes. Remember, we're going to take plenty of losses and we're going to take plenty of winning trades as well. And the first point is, here's a good example, all right, for a lot of people. So a lot of people, if they see this, would close that trade, right? It's broken that high. They'll think that there's a little inverse head and shoulders. It's going to shoot right up, almost hit stop loss. But again, if you had you set and forget the trade, you would have avoided taking, closing early, taking a loss, and this would have come back down into profit. And now we're just sort of seeing what happens. It can still turn around and get us out of stop loss. So there's no sort of, it's not safe yet to sort of call it a profitable trade. And look, here's an example. Had you not taken that one, this probably would have been an entry as well. Yeah, that would have been an entry right there. So there's two actual entries here. Now, I would not have taken them both, but had you not taken this one here, this would have been another entry. The reason being is we had a pullback, lower high, rejections, bearish engulfer. That would have been your entry right there. Stops about there. You can go to the same take profit level, right? So do you guys want to count the two trades or just the one? You tell me and I'll decide. I'm happy to do either or because they're both valid. They're both perfectly valid trades. We'll count for the two. All right, we'll count for the two. Brad one. It's tricky. Me personally, I'll just take the one. Okay, I would not have taken two. So that one would have been a loss. So we'll type in one loss right there. That one is still chugging along. And that one would have been a loss. There you go, 2 losses. And that's why I only take the one trade. All right, now moving on. Now we're above the 20 EMA. That's why I only take the one trade and the one pair. I don't scale in. All right, that's why I do. That's a good example of why I do not scale in. So now we're looking for a selling opportunity, except we're looking for it on the daily chart, right? We're above the 20 EMA, right? We're pretty much touching the 50. Yeah, it is brutal, and that's why when people ask me, do you scale into trades? No, I don't, because that can happen. Right. Anyway, moving on. We're looking for selling opportunities now on the daily chart. So above the 20, we're looking for rejections, bearish engulfers, those beautiful things that we always look for. There's a nice rejection right there. Let's just sort of wait. 2 rejections in a row. This is looking good. This could turn around. Rejection. We got the pinching cross. Here we go. Retesting that resistance right through there. We just went for a bearish engulfer. To close below this area right there. I'll make that black. Not yet. There's no trade yet. This is where it gets frustrating. Now this is really getting ugly market conditions. Like, personally, I'll probably hesitate trading this market condition. So I just want to sort of get to where it starts to trend again. If it starts, I know it's going to start. It's just a matter of when. So right here is actually a good point. Now, we already know this continues down because of history, right? We already know what happens in the future with Aussie dollar. But at the time, we wouldn't actually know this. So at the time, we'd actually be looking for buying opportunities here. There'd obviously be nothing yet, but we're above the 200 EMA. But when the moving averages do this, they're all squished together. That's just a flat market. I would not even be looking at the Aussie dollar at this given time. So personally, I would be skipping all of this. I would not have looked at it. I would start to get interested when I see this. Oh, no, never mind. Now it's over with. Let's just sort of move on. And this is where I'd start to get interested for a buying opportunity, right? So I'd be like, okay, cool. We broke the support right through there. Resistance is about there. So I'd be like, okay, cool. We have that big distance between us to look for a buying opportunity. I honestly can't remember if it gets out. I don't think it does. But even if we know it's going to be a loss, we still have, well, what happened there? This is why I don't like trading view. What happened? You guys see that too? There we go. We're looking for a buying opportunity, right? And now, right, there's no opportunity there. And now we won't be looking for a buying opportunity. So we're just looking for a trending market again. I'm just going to replay this. That is so slow. We're just going to wait for the trend to start. Here we go. All right. I didn't wish I didn't do that so rough because I would have been interested. That sucks. All right. Anyway, trend started. So we can go back to the 4 hour. The reason we go back to the 4 hour chart now is because we're under the 20.5200. Quite a significant move down. We go to the 4 hour. We start looking for selling opportunities. And it sucks that I made that go so quick because that would have been an opportunity right there. But now we know what's happening. We can't count it in. Otherwise, that would have been an opportunity. That would have been a trade we would have taken. But we already know it's happened. So, you know, I don't like to count the ones that I go, oh, that would have been a trade that I would have taken. But yes, that would have been a profitable trade. Anyway, we're not going to count it though, because we don't want to. We want to. When I backtest, I'm looking for the worst case scenarios, not the best case scenarios. So I don't know how I do in the worst case. Now on the 1 hour chart, there'll be a lot of trading opportunities here. But remember, I don't trade the 1 hour, right? There would have been so many trading opportunities, valid trades right there, right there, right there. All these would have been nice, profitable trades. Again, I'm not on a 1 hour chart. I'm on the 4 hour, 4 hour daily. So we're just waiting for a pullback now on the 4 hour for an overbought stochastics. Here we go. All right, so we've got the overbought stochastics. We've got this little rejection candles right there. Let's have a look what's happening on the 4 hour. Sorry, the daily. Daily is at a major support level. So we're not going to buy into that, but we're going to wait for the break and retest. There we go. So now we've got this little flag happening. Oh, there it is. All right, we can start looking at it. Nah, I don't check the 8 hour, 12 hour stuff. So this would be a valid trade. You could sort of look at taking, right? on that 4 hour, on that daily break of the flag right there. Break of the flag, break of the support, that would be a trade. You could look at taking it. Where would my take profit be? Let's go to the weekly chart. My take profit would be, I'm looking over here for my take profit, by the way. And what I'm looking for is where's the next big level price wants to go to. And it's about that. Yeah, I'll show you when I trail my stop losses. So this is a trade that would have and remember, this is the daily chart. So this would have been in profit for 1, 2, 3, 4, 5 days, pull back. This would have been well over 2 weeks of waiting for that. And that would be very frustrating. So right now it's sitting at 1 to 1, just over 1 to 1. Right? Here we go. Right now is where I'd start trailing my stop loss. Okay. So I would move my stops to 4 hour. What's the, sorry, I'm just looking at we're at a 1 to 2 at the moment. At this point here, we're so close to take profit. I'd lock in that 1 to 2. I'd lock in about a 1 to 2 right there. We're going for about a 1 to 3.5. And you can see, just missed this trailing stop loss. So they're still in the trade right there. From this point here, if you really do want to move it, you can move it back down under that low right there. So you're locking in, sorry, it's up here, 1 to 2.5, just over. I wouldn't, but you could. There you go, target hit. So there's the trade hit. That was a one trade at a 3.5 risk reward ratio. Okay, so now we just move on, look for the next trade. And that trade would have been running for 1 month, right? 1 month that trade would have been running. Moving on, right? Now we're looking for another trade. 4 hour chart. The reason we go back on the 4 hour chart is because we are below the 20, the 50, 200 EMA, and the 20 EMA. So this nice big downtrend happening here. We're below the 20 EMA. We can go to the 4 hour chart and start looking for trade opportunities. Now, what I'm looking for is where's the next big level of support. So we just broke this level here where our take profit was, right? It does. But with exceptional patience comes the best and biggest trades you can get. These, I don't usually have this many lines on my chart at all, but these are the only support and resistance I care about. So the ones we just broke, that was a resistance. This is the next big support that I really care about. After that one, this is the next one I care about. After that one, this is the next one I care about. Tell you something, Saeed, I did not build my trading counts up through day trading. Trust me when I say that. So we can go to the 4 hour now. Now, what I'm cautious of when I look at this, now this is back testing, by the way. This is how like patient you have to be in back testing. You don't rush it, right? Because you don't want to miss anything. See how, I mean, we've been chatting for 20 minutes and we've taken 3 trades during the back test, right? Because you have to really be careful of what you're looking at. Because you don't want to rush it. If you rush it, you go, take this, take that, miss that, miss that. Be patient when back testing. Right? Think of it like studying. I'm sure a lot of you have been to university. Think of it as studying. You don't rush I'm sure you do rush your exams, but yeah. Anyway, now something I'm very cautious of is on the daily chart is how far extended we are from the 20 EMA without having a decent pullback yet on the daily chart. And that tells me that we could be due for a pullback. Okay. So I'm still going to go to the 4 hour. I'm still going to look for selling opportunities, but I'm very cautious of that as well, that we could get a decent pullback. So if I start to see a big pullback, I'm not going to be surprised. And again, we're just waiting for overbought. Okay, here we have overbought stochastics, right? We have price at this little resistance level right there. Let's go look at the daily quickly. catching up to the 20 EMA. So let's just see what happens right there. So here's another trade opportunity. So there's a trade I would have taken. Yeah, that's a valid trade. The reason it's valid is, well, we've got the overbought, rejections, rejections, rejections. Ideally, and what I might wait for is I'm actually going to wait for a close below that 20 EMA. There we go. All right, so now I'm happy to enter this trade. Right, remember, that big level is our next big target we're looking for. Now I'm prepared. When you zoom out, you can't see it. Okay, I'll try. Can you see it now? How far zoomed out it is? I only zoom out just to have a quick little look where we are. Like you mean like that? Yeah, I can't see what's happening, but I'm just sort of, when I zoom out that far, I'm just looking at big support levels. I don't trade like that. All right, so now what I'm prepared for is I am prepared that this could come back halfway before it drops, all right? It may or may not happen, I don't know. I'm just taking the trades as I see them, right? And my stop loss is going above this big wick right here, right? My stop loss is not going above the entry candle because that's way too small. It's going above that big wick right there. Let's see what happens. All right, so we're in profit a little bit. So yeah, here, pull back halfway. I was prepared for that. Pull back again, prepared for that. And you can't get discouraged when that happens, right? You cannot get discouraged when you're in profit, it comes up. In profit, comes up, hits stop loss. It's going to happen. That's all a part of trading, right? So we've got another loss. So out of 1, 2, 3, 4 trades, we've got 3 losses, 1 win. We're still a little bit in profit because remember, we took a trade that was 1 to 3.5, I think. So we're only a little bit up, right? Not a whole lot, a little bit up. But anyway, we're looking for another trade now. So we're above the 20. Oh, actually below it, but we'll see what happens. So below, is it gonna go? All right, so now we're above the 20 EMA. We're looking for a trade only on the daily chart. So we're just waiting for, oh, there it is right there. That's the trade we're looking for right there. Big bearish engulfer, close below the 20 EMA on the 4 hour. Sorry, on the daily. So am I going to get a decent risk reward out of this is what my thing. Try, can you just go to the daily chart? 1 to 2 minimum. So yeah, I'm happy with that. Oh, there it goes. Target hit. So it's 2, right? Still in profit. Right? Even though we've got 3 losses, 2 winners, we're still in profit. Next trade we're looking for. And again, because I was too quick and I missed it, that would have been a valid trade exactly right there. So I entered because we had the break of the 20 EMA, right? So we had the push up, rejections, rejections. Right, we had this little flag happening, break right there, and I was happy with that. I should draw it so you guys can see it. So I just sort of visually draw it in my head, but yeah, we had that little that right there. So I was happy with that. Anyway, moving on. Moving on. So this is the big support we cared about. Remember, this is the only next big support we care about. I want to see what price is going to do around this level here. We're going to shoot past it. We're going to no, oversold, overbought is necessary. Definitely is necessary. I do look at it quite often, but as I said, I think it was yesterday's or the day before, whatever it was. There's what just happened? Why did it go to dollar CAD? We went on dollar CAD. We were on dollar Aussie, weren't we? Man, what happened there? Trading do view this to other people. Where were we? We were here. But now it's kind of cheating because we know what happens. That's where we were. It sucks. I don't want to do it now because we know the price action. All right, I'm going to pick another chart now. Sorry, that was my bad. Anyway, so yeah, no, Dimmer, overbought, oversold definitely is necessary. It's just at times you know when to do it and when not to do it. You know what I mean? So there's going to be times when you go, you know, we have this sort of price action signal that happens. So like I showed you the flag, the big bearish engulfer closed below it. I was happy to take based on that. But like 80% of the times I enter a trade is the overbought, oversold with the trend, blah, blah, blah. Anyway, all right, New Zealand, US dollar. Ideally, we would be looking for a buying opportunity, but it's really not the best price action. So I'm going to sort of let this play out a bit and see what happens. So let's just continue where we were. We got the 2 winners, 3 losses. This is no trade opportunities. This is no trading conditions. So we're just going to go and wait for a trend to start. There's no trading here. Okay, here, now we're getting interested. We're below the 20 EMA, right? So we are interested here right here. Okay, so below the 20 EMA, the 50, the 200, I mean, this could be the start of a trend, right? We don't know yet. So let's sort of see what happens. Okay, so I don't want to rush it again. Okay, here we go. All right. See how the 20, the 50, 200 are all starting to fan out. We're starting to get that momentum to it. This gives me some interest. This makes me go, okay, cool. We may start looking at getting trades here. Now, for yesterday's webinar, so whenever it was, Monday. Anyway, Chris, I think it was you that asked on one of the trades. Actually, it was about the New Zealand Swiss trade. Don't I like to wait for a few days to wait under it? This is a good example of when I would start looking at selling a trend, right? This is when I'd go, okay, look, we've held under the 200 EMA for quite a while now. This is where we get interested that, okay, this trend may start and we can start looking at entering this, right? And then we sort of look at this and we go, all right, what else do we have in our favor? Well, we got this little bit of a head and shoulders, right? I'm not the biggest pattern trader, but if it's there, it's there. So we've got that bit of head and shoulders. What else do we have? Where's the next big level of support price is going to go to? So I'm just going to measure where price currently is. I'm just going to drag this down. Where's the next big level of support? To me, I'm going to go about there, which highlights this whole area here. All right. And we can go, okay, cool. What's happening on the 4 hour? So the 4 hour, nice big head and shoulders right there. But there's definitely no trade opportunity on the 4 hour. So we'll go look at the daily chart. And let's have a look. So basically what we're looking for now is we're looking for a trend to start. And it's probably not going to start. Yeah, of course it doesn't start. Okay, no, it's starting now. It just wanted one more big kick up before it pushed down. This is not an entry, right? As the signal looks great, but it's not an entry. Why? Because we're above the 200 EMA. EMAs at the time would have been flat. We would have been going, there's nothing there. But now they're all fanned out. They're going down. We've broken past this. We're interested, right? And we're looking for a selling opportunity. We're below the 20 EMA. We're below this support level right here. So we can move to the 4 hour and start looking for selling opportunities. Right there. There's your trade, right? So overbought on the stochastics. Now, it's very important as well to pay attention to the stochastics because what we get is when the blue is above the red or orange, whatever color you want, that shows us bullish momentum. And at that time, right, when we get the blue above the red, yeah, there's little bullish momentum pushing up, okay? When they sort of pinch within the overbought area, it can be just under it. I don't mind if it's just under it a little bit or over it or just on the line. It's all sort of in that relative area. When they pinch, that tells us the momentum's slowing down. So the pinch with the stochastics, when the 20 and the 50, sorry, not 20, 50, when the blue and the red pinch together, and we get the momentum of rejection candles, that tells us right there and there that momentum is dying. So then we go and we look for the crossover. So the blue crosses back below the red. That tells the momentum to the downside. It has kicked in and should continue. From there, we need the bearish engulfer, right? We have the bearish engulfer right there. Now, A lot of the time, you're going to see the crossover like this before you see the engulfer. So that's your clue, right? That's your first clue that goes, okay, so let's wait for the engulfer now. So what we have on this trade is we have the rejection candles, right? We have the little flag right here. We have the break right there. I'm happy to take that. Hopefully this is insightful for everybody. Now this is definitely going to be a trailing stop loss trade. Now my stop loss is going above this one right here because that was the breakout candle. Price pulls up, breaks out, puts that little wick in there, pushes up, breaks past this little flag right here, or pennant, whatever you want to call it, bearish engulfer. My stop loss doesn't want to be above here because it can still sort of do that. It wants to be above that engulfer right there. So now we just sort of play it. Oh, I don't want to go too quick, do I? Because we know what happens then. So here we go with a very nice trade. And this is when you backtest. This is how you have to do it, right? You can't rush the backtest process because if you rush it, it's not going to go very well. You got to really take your time and analyze the market, right? Like I said, like 34 minutes we've been going on and we've done 1, 2, 3, 4, 5 trades, right? You have to take your time when backtesting. It pays off. So anyway, at this time, my stop loss will be at break even. So I'm just going to, remember we're at a 1 to 3.5, our whole risk reward. So I'd move that to break even at the moment. And at this point here, once we broke past this low here, low there, I'll then move my stop loss to lock in. What would that be? Actually, let's just keep it. I shouldn't have done that. Hang on, I was going to redo that. So I would have locked in right now, just, like 0.67. So a little bit of profit, nothing extravagant. If you want to be a little bit more safer, you can lock in, each low that goes down. So that'll be 1.23. So like I said, if you want to be a little bit more, you can lock in each low that goes down. That's totally fine as well. It's just, me being much longer, I'm happy to sort of sit through, and as experience comes in, I'm happy to sit through that when most people wouldn't be. So that's fine as well. So anyway, profit hit 1 to 3. So we got 3 winners, 3 losses. Each one of those winners was about 1 to 3 times our risk. So we're doing good here, right? No, I don't add to trades, Miriam. I never scale into a trade. I don't scale in unless I'm already in like a massive long-term trade that I've been holding for like 3 or 4 months. And I'm like, I've already locked in maybe 1 to 3 or 1 to 4 on that trade. Then I might be locked in. I've got written down 3 losses, 3 winners, unless I missed one. 5 trades at any given time. So in saying that, so I've got a couple trading accounts. One of my trading accounts, I risk 0.5%, right? And I only allow for 2.5% maximum exposure at any given time on that account. Now I have another trading account, which is the one that I'm using for Global Institute trading, for webinars and whatnot. I was risking 0.5%, but because it's a relatively small account, I'm going to start risking 1%, right? And I just started risking 0.5% when I opened it because I'm so used to it for years, just 0.5%, 0.5%. Then I sit there and realize I'm like, well, it's a small account, so I may as well risk 1% anyway. I'm happy to lose that. And I'm happy to have a 5% maximum exposure on that account. So what that means is that the account that I risk 0.5% on with a maximum of 2.5% exposed at any given time, that is a much larger account, which I don't show you guys. I don't want to showcase that trading account. But the reason I risk 0.5%, even though 1% is safe, the reason I risk 0.5% is for the dollar figure. I'm not comfortable losing the dollar figure of 1% on the account that I only risk 0.5% with a maximum 2.5% exposed. My webinar account, which is a lot smaller. Now, when I say small, it's still good size. I'm happy to risk that 1% because that 1% is about $1,800 on that account, with a maximum of 5% exposed, as opposed to 0.5% on that account. So my overall sort of answer to that question, YH, is risk 1% with a maximum of 5% drawdown. So that means that if you take 5 losses in a row, you're only going to lose 5%. That's easy to recuperable from that, you know. Don't have like, you know, 3% risk on a trade and then like 5 trades open, right? Because that's a lot harder to come back from. Anyway, moving on. We took this trade and we win. So there's 3 trades, right? Moving on. We're just looking for pullbacks now. Right, pullbacks overbought. Now, because we're so far extended and we haven't had a decent pullback in a while, I want to check the daily. I'm not comfortable buying this one. Well, for one, it is near some decent support. Oh, pardon me. But also for the fact that we do have a big bullish pin bar, and we're very, very far extended from the 20 EMA right there. So I don't feel comfortable buying that one. So what I'm actually going to do is I'm going to get rid of that. I'm going to wait on the daily chart, and I'm going to wait for a pullback with an overbought stochastics on the daily or close enough to it before I start looking at selling it. Now I'm going to sort of weigh up where would I likely sell this market. Probably that level there, right? That's the big level of support, right? That we've broken and then come back down. But I don't actually know where it is going to be, so we're going to just wait and see. And again, the reason we're not on the 4 hour is because, well, one, that big push into there, you know, the big pin bar thingy. And we're so far extended from the 20 EMA. We've had a big drop. We've had 16 days drop in a row without a pullback. That's not healthy. We need to have a pullback. So we're waiting for a pullback. I'm not comfortable selling that. I'm not comfortable selling that because we haven't had a rejection candle. We just sort of pushed up and then pushed down. Now, that could definitely work. I don't know the statistics behind that particular setup, but that could work. I don't know, but it's not in my trading setup. So I'm not going to sell it. I need to see rejection candles, bearish engulfer, not just push up, bearish engulfer. And look at that. It would have worked had you taken that trade. By all means, it would have been a very profitable trade. Anyway, we can go back to 4 now. And these I would not have taken, right? Mostly because it was so close to support. So I would not have taken that trade. But we can start looking for pullbacks now into here. Okay, so this is our area of support now. We want to look for a pullback. Oh, that was quick. I don't know what happened there. Anyway, there's no trade. So if you hear my wife blowing her nose in the background, she's sick as well. No trades yet. Waiting for pullback. Whoa, there we go. I gotta remember that's too quick, that play button. All right, here we go. All right, let's rejection, bearish engulfer, overbought. What do you call it? Pinch and cross. You know, what do we have here? 56.8% from that pullback right there. I'm going to take a small punt on it and go, yeah, let's sell it. I may have a wide stop loss depending my risk to reward. Okay. So what does turn me off, which I did want to sort of look at, is actually, no, we are below it. No, that's fine. We can sell that. Our next big level of support that we care about is look, that's an area of support, but it's not a major one that I care about. That could definitely stop price and push it back up, but I don't care about that one. I'm looking at down here. So I'm happy to continue selling all the way down to this 60 level. So let's take that trade and let's see what happens, right? So I'm going to take that. Yeah, I don't know. I didn't even look at that. I'm not going to sell it. I'm not going to take it just because of bullish divergence. Like, that doesn't bother me. The only thing I'm looking for is oversold in the direction of a trend or overbought in the direction of a trend. So right now we're just sort of, you know, looking for You know, that's all we're looking for. Does it tell you where this pips amount is? I don't know. Probably going to stop. There we go. Stopped out. So now we can sort of look at let's see, it's probably above the 20 on the daily. Yeah, it is. So now we look for selling opportunity on the daily chart, right through there. Right, 61.8%, 50% resistance, rejection counter right there. Overbought in a minute. I can almost guarantee it. There we go. That's the entry, right? That is your entry right there, right? With the wide stop loss, right? Let's see what happens. So my stops are going to be above that little high right there. Oh wait, take a loss. So I'm going to write that down. 4 losses, 3 winners. So my stop's going to be above that high right there. Okay, we're overbought. I'm happy to sort of sell it now, even though we don't have the pinch across yet. But the reason I'm happy to sell it now is because we've had the rejection bearish counter right there. This could push up and then push down. Let's see what happens, right? I don't know everything that happens in trading. And look, had you not taken that one, this would have been your next entry. That would have been a valid trade right there, right? Right there. There you go. Profit hit. And then a target hit. So that was a profitable trade right there. So that was a 1.29 risk reward, and that actually hit quite quickly. 790 pips in 12 days, right? Not bad. Not bad. Well, it's not about the pips, is it? You can have a 200 pip stop loss and risk 1%. You can have a 20 pip stop loss and risk 1%. You can have a 300 pip stop loss and risk 1%. So it's not relatively, you know, we're not counting pips here. We're counting percentages. I never count pips. I don't give a shit about pips. I care about percentages. Pips aren't making me money, right? It's percentages. It's about your risk, yeah. Yeah. So yeah, it's like I said, you can have 300 pips take profit and only make $10. You can have a 300 pip take profit and make $1,000. It's all relative to how much you risk, and how size your stop loss. So one thing I actually do see a lot of people doing wrong is they go, I'm going to have 50 pip stop loss for 100 pip take profit on this trade. Now, the problem with that is a lot of people have a fixed stop loss. The problem with that is your risk reward is always going to be out of whack, right? If you have a 50 pip stop loss on every trade, and let's say 150 pip, no, that's supposed to be a 150 pip take profit on every trade. The problem is that 50 pips on this one may be $1,000. 50 pips on Aussie dollar may be $700. 50 pips on dollar yen maybe $1,200, right? So you never have a fixed stop loss, right? Your whole trading will be out of whack. Your risk rewards. Always calculate your risk to your the size of the pips. So what I do is I measure the stop loss and go, okay, 270 pips, and then go, how much? What's my lot size needs to be to have a 1% risk on a 270 pip size trade on that one, and then I'll go, I need to do a 2.38% or whatever it is. Sorry, 2.38 lot size or 1.67 lot size. This is why when my trades, you see that open, there's always different lot sizes, right? It's never the same lot size, like 0.50 or 0.1. It's always 1.28 or 2.46. So yeah. All right. So in this 45 minutes, we've managed to backtest 8 trades. Each trade was pretty well, apart from this one was the 2.9%. Each trade was pretty well 3.5%, right? And each loss was 1%, right? So 4 winners, 4 losses. You know, I'm happy. I'm happy with that result. Hopefully that was very insightful for you guys. Right? We're not going to backtest 1,000 trades today, but we'll do backtesting every Wednesday. Every Wednesday's webinar, we're going to backtest. And hopefully this was insightful for you guys to understand how I backtest, what I'm actually looking for. Yeah, this will be handed to Nick and we'll post it from there. But yeah, that's, that's everything I'll do right there. Any questions? I'm not going to go through a million questions, so just a couple questions. Dimmer, you have a question? Dimmer or Dimer? Dimer? Is it Dimer or Dimmer? Anyway, you have a question? I think. Do you have any advice? I feel fear of setting higher risk reward than 1 to 2 because I think it's too far from this. Set and forget. Man, just take the trade and forget about it. If you're fearful from, and this goes for anyone, if anyone is fearful of being in a trade, you are not ready to risk that money. So don't risk it. Go on demo and do it. Right? I know everyone says, oh, go on live account because it gives you more real emotions. But if you are uncomfortable holding a trade until it hits your stop loss or take profit, stop risking real money, go to demo. Then when you can trust the trading system, you know that it's okay to lose 3 or 4 losses in a row. It's okay to hold for 1 to 3 or 4 risk reward ratio. It's okay to sort of sit out of the market. Once you can trust yourself doing that on demo, then move back to live. So yeah. Get fun your house in order. Yeah, exactly. Exactly, Mariana. That's great. All right, guys. Take care. We'll see you in some the next webinar. As a rule, where should I place my stop loss? We'll go over that in another webinar. I'll do another webinar about that. I'll explain a bit more. All right, guys. Take care. We'll see you then.